Hello there, and welcome to today's Five with Fitz. I'm Keith Fitz-Gerald. Thanks as always for joining me. You know, the legendary Susie Orman has a little tactic that she pulls out whenever she really wants to make you think about something. She calls it Susie School, as in you're about to get taken to class. It's not an insult, but a badge of honor. And I say that for two reasons. Number one, she's super savvy. And number two, she doesn't mince words, which means that you get whatever she wants you to think about or consider straight up, no fluff, usually with a dash of humor and fun too. Well, yours truly, yesterday, I got Susie schooled. Look, Keith, she said, after reading yesterday's Five with Fitz about getting real with Palantir. I get that Palantir is a great company and that a lot of people are doing foolish things with their money right now when it comes to that stock and the sell-off. But there's a bigger issue, she said. My ears perked up. Tends to happen when Susie says something, but my ears perked up. And then she dropped the hammer. Many people don't know what to do when they don't know what to do. Let me say that again because it's really profound, actually. Many people don't know what to do when they don't know what to do. Son of a gun, I thought to myself, right? 45 plus years in the markets, and I'd forgotten one of the most fundamental lessons of all. Something that I first learned as a new investor when I had no clue what to do next because I didn't know what to do next. Susie, of course, is right. So I thought we'd take a minute today to talk about that in my own investing journey rather than rehash the same tired old headlines that honestly aren't helping matters much. I mean, you know the drift. Geopolitics, the Fed, tariffs, blah, 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 blah. Anyway, I developed a simple three-step process years ago to help me break through this very logjam of uncertainty that was holding me back at the time under very similar circumstances to what we're facing today. Now, I've long since forgotten the name of the stock that was giving me heartburn at the time, but I do recall how uncomfortable it was not to know what to do. So I call my process the ADC for reasons that will become clear in a minute. It's perfect for those moments when you have no idea what to do or how to invest, and I'm sharing it today because I hope you find it as helpful in your life and investing journey as I do and did with mine. So anyway, why you'll want to ADC. Sell-offs can be scary. There's no doubt about it. It doesn't matter whether you're talking about a stock like Palantir or even the broader markets, right? The headlines scream, the red ink flows, the pundits talk doom and gloom all dang day long, each one of whom is trying to outdo the last one on camera. Social media, of course, magnifies the problem. It is easy to feel overwhelmed, especially if you're just getting started or you don't have a lot of money. Heck, even if you do, right? I know this sounds trite, but it doesn't have to be, right? Don't be trite. It isn't. It won't be. Sell-offs like the one that's underway now are actually your best friend. And if you want to build real wealth and serious financial security over time, the key is knowing how to respond when everybody else around you is losing their you-know-what. So here's how you ADC, or at least how I do it anyway. You may come up with something better, frankly. But step one in my ADC process is this: assess. That's the A, assess. And there's three parts of that: observe, reflect, and clarify, right? Now, believe it or not, your first job isn't to trade when the markets get nuts or a specific stock slumps. It's to take a breath. The smartest thing you can do is step back and assess what's actually happening, not what the media thinks you should think is happening, not what social media thinks is happening, and sure as heck, not what others think you think about what they think is happening. I mean, ha! See that over and over and over again. Social media just amplifies the stupidity. So flip that around and keep it stupid simple, right? Doesn't have to be complicated. Observe what's moving and why. Are you looking at panic selling or is there a genuine structural shift? Is there an identifiable logical reason for whatever's happening? Keep your emotions out of the equation. Second, reflect. How does this really impact your goals and your time frame? A 10% dip feels catastrophic in the moment, but it's often just noise over the long run. I mean, for example, Palantir, right? It's up thousands of percent over time. Do you really care about a 9% dip? I mean, seriously? Amazon lost 90% of its value after the dot-com crash. People simply either don't know that or they've forgotten that. But Amazon lost 90% of its value after the dot crash, and look at where it is today. More than 5,000% higher. Apple has been nearly bankrupt 3 times, yet it's worth $3 trillion today. Get my drift, right? Now, clarify. What do you already own and why? If you can't answer that, it's time to tighten up. Sell-offs are not fear generators. Fear is what you feel when you're scared. So if you take that out of the equation, what you're left with is clarity. Put it another way. What I've learned over the time is that lots of red ink has a funny way of stripping away the hype and revealing which companies are truly built to last. Sell-offs are clarifiers, folks. Step number 2 in the ADC, decide. Consider, evaluate, and select. That's how you do that. Once you've assessed the landscape, right, what's happening, why you feel the way you do, it's time to decide. I do it in 3 ways. First, you consider what opportunities look better now than they did last week simply because the prices dropped. Remember, something you hear me say often, a Keithism, if you will. The markets are the only store on earth where people fear a sale. Let that sink in. Evaluate what's happening. Focus on quality. Strong businesses with fortress-like balance sheets, repeatable growth, and leadership in their industries. History shows very, very clearly that the world's best companies always rise to the top, which is why your job as an investor is to latch on to them as early in the game and the process as you can find them. Volatility is not something to fear. It's simply the price of admission, nothing more. And finally, select. Many people ask me constantly when they know what I do for a living, about hot stocks. But that's a really foolish way to do things. Flip that around. Turn it inside out. The question you want to ask yourself, doesn't matter whether you're beginning, investor catching up, starting late, finishing early, doesn't matter. Ask yourself which stocks are likely to be there when you need them years from now, and then you buy them. It's not about chasing bargains, but finding those names that you can confidently own long after the sell-off that's bothering you fades. Gambling is for the casinos. Investing is about stacking the odds in your favor, one smart decision, one smart stock or fund at a time. And finally, step 3, the C. So it's ADC, right? Commit. And you do that by planning, acting, and persisting, right? Many people decide to be rich, but then they fail because they don't do anything about it, or worse, they chicken out. Now, I can't think of a more expensive mistake personally. Decisions are like belly buttons in that everybody has one. But the world's most successful investors and traders follow through because they commit, right? That's the C. Plan how to do this. Decide how much you'll invest and how you'll pace it. Meaning, for example, dollar cost averaging and its lesser known cousin, value cost averaging, are tailor-made tactics for market uncertainty. Both can go a long way towards limiting risk and boosting your profit potential over time, which is why I advocate them to the point of sounding like a broken record. Susie many times too. Act. Hesitation is a wealth killer. I can't tell you how many thousands of investors I've heard lamenting over the years that they should have bought X, Y, or Z back when it was cheaper. Just $1,000 invested in NVIDIA in 2011 would be worth something like $652,500 today. Every $100 invested when Microsoft sold off during COVID would be worth $390.59 today. Every $1,000 invested in Palantir just 3 short years ago today would be worth $18,220 today. And that's after the sell-off. Persist. All the money in the world doesn't mean squat if you don't stick with the program. Markets rise and fall over time, and the sooner you come to terms with that reality, the easier this gets. Remember, wealth always builds fastest for those who stay the course and stick to the plan. Sell-offs are not the monster under the bed that many people think they are, but they're a door to opportunity. So I say kick the dang thing open and ADC your way to the party. You can do this, just like I did. I'll see you at the party. By the way, here's a chart in the written version showing how I think about the ADC process that you can clip out, paste on your monitor, even your bathroom mirror, your forehead if you want. But I find it helps me, think about things simply, logically, in straightforward nature. And just because we're not here for the dental plan, a couple things to bring to your attention as I scanned the headlines this morning. Walmart just hiked full year guidance this morning. Leaps could be mighty attractive in addition to the stock itself. Palantir sellers appear to be finally getting exhausted. You know what to do if you've been following along. And finally, ESPN streaming, I think, could be a new Coke moment that actually backfires and costs the company subscribers. Put skis on Disney? Maybe. Anyway, today's bottom line cuts right to the heart of the chase. Susie has the Susie School. I got the Fitz Fix. This is your Fitz Fix for the day. Anybody can pick stocks, but knowing How the game is played is what gives you the edge. So learn. The FUD, the fear, uncertainty, and doubt, will fade over time to be replaced by serious confidence, profit potential, and financial security. That's how this game works. That's how you play it. So you got this, I promise. And of course, thank you, Susie. You're the best. I will see everybody tomorrow. Let's make it a great day and talk to you then.